Hello and welcome to the webinar today. My name is Jeff Levitan. I'm the president of Transformation Financial. And I know all of you out there watching today are probably going through a little bit of angst and a little bit of anxiety with everything that's going on in our economy today and in our society today. And people are wondering what the future is like. There's a certain degree of uncertainty right now in both the stock market, future jobs in the economy, and then of course the health of people in general. I'm going to share with you today my business, and a business that I've been running for over 25 years very successfully. And the reason you've been invited on today is for a few reasons. Number one, the business that we're running is booming right now. Most businesses are struggling. A lot of people are laid off or furloughed. Companies are looking for executing some degree of business interruption insurance because their business has been interrupted. And the reason we're on today is because we have not been interrupted at all. As a matter of fact, in this moment, there are a lot of businesses that are booming. They're like Netflix. People are at home right now watching a lot of Netflix. In addition to that, there's teledoctor, where you don't go to the doctor, you just look at the doctor and they assess you on video and give you some prescriptions, Square Reader and things like that. Technology type based businesses, Zoom, the platform that we're on today, the stock is booming and the company's doing great because of the situation right now. And in every adversity are the seeds of an opportunity, but you got to look for them. And today I'm just going to share with you my company's story in 20 minutes. And I just want you to ask yourself a few questions as you're going through this. Are these good people trying to do good things for others? Number two, is there money to be made here? And then number three, is this something that you could possibly do? I want to let you know right up front that this isn't one of those join type of businesses. This isn't something at the end, it's an infomercial and you sign up or buy a package or get two people to get two people. It's nothing like that. It's a legitimate corporate ran business. We just happen to have a work from home opportunity that you really need to consider right now more than ever. It's a great idea, and the best time to act on a great idea is yesterday. The second best time to act on a great idea is today, and the worst time is sometime in the future. So I'm going to go ahead and get started with the PowerPoint. I'm going to share my screen. If you have a minute, I want you to watch this. Let me get in the screen sharing part here, everybody. Okay, here we go. So Transformation Financial, based here in Atlanta, Georgia. I'm from Chicago originally, but I relocated here 13 years ago with my family. Our mission is to help people from all walks of life to build a better financial future. Simple as that. As we go through this, ask yourself these three questions. Do you know someone who could benefit from this message? Secondly, can this information help you, your family, and your friends financially? And then last but not least, are you intrigued by what you see and hear today? Our strength. If you have not heard of our company before, perhaps you've heard of our broker-dealer, Transamerica Financial Advisors. That's where we clear our securities and investment business through. And our back office platform is a company called World Financial Group right here in Johns Creek. They handle our payroll, our technology, licensing and appointments, and the back office type stuff that most small business owners don't want to deal with. If you haven't heard of those, perhaps you've heard of our parent company, Transamerica. You could see the tower to the right of your screen there. It's one of the most recognized landmarks in the world. It's based in San Francisco, and we're a wholly owned subsidiary of that company, and they are a wholly owned subsidiary of a company called Aegon, which is a Dutch company based in The Hague, Netherlands. It's a multi-billion-dollar multinational company, and we've been in business for years. I've been in business for over 25 years. Transamerica has been in business for over 100 years, and we just have a tremendous track record for success, everybody. So timing is everything, wouldn't you agree? I mean, if you look back, I don't want to make light of this. There's three major reasons right now is very important. One is a segment of our population called the baby boomers. Baby boomers were born after World War II. All the soldiers came home, and guess what? They made a lot of babies, 77 million roughly, and everything they touched turned into a multi-billion-dollar business, and everyone that was related to the business that was hardworking and had integrity, well, they became multi-millionaires. Just imagine when 77 million babies were being born. If you happen to be in the diaper business or baby food business, Gerber, Pampers, they're household names today, Johnson & Johnson. Those kids got older and needed toys and bikes, Mattel, Schwinn. They're still household names today. As these kids grew older and touched the fast food industry, it was created when this happened. And what did that do? Well, it changed the eating habits of the nation. And everyone went from sitting down as a family to eating out and grabbing a bite on the way home. Then they started driving, and Detroit became the motor capital of the world. They couldn't produce cars fast enough. Then the people started buying homes, and there was a real estate boom. Well, what's next? They're all retiring at a rate of 10,000 a day. I'm going to talk about that in a minute. At the same time that's going on, there's something going on in the financial industry. Nearly half of all existing financial advisors are actually over the age of 57 now. All the young people have been getting into technology, not into the financial industry like they used to. So what does that mean? In the next literally 10 years or less, a third of them are going to retire, and it's going to leave an estimated shortfall of over 250,000. Some of these numbers are a little outdated, over 250,000 advisors literally in the next few years. So if you're trying to find an opportunity and you're in all this mess, well, there's a great one. There's a third one here too. Young people and a lot of people now want to work from home, but they want to do something legitimate. They want to do something that's a real career. And the financial industry just happens to be that. It's got dignity, professionalism, and there's a real opportunity to get compensated at a very high level, and we're going to talk about that a little bit later today. Let's dive a little deeper into the timing. Every 7 seconds, someone in America is turning 65 at the rate of 10,900 a day, every day for the next 9 to 10 years. The boomers control 70% of America's wealth, and 58% have never spoke to an investment person. What does that mean? They're winging it. Folks, we could wing a lot of things in our life, but we shouldn't wing our financial futures and our retirement. And right now, what's on their mind? Protecting and growing whatever money they have left, income distribution from putting money into 401ks and IRAs to taking it out and living off of it, wealth transference. How do I give what I worked a lifetime for to my children without the IRS getting their unfair share? And then last but not least, how about an encore career? Just because somebody's 65 right now doesn't mean they're done. 65 is the new 50. People are younger, they're healthier, they're living longer. Well, they want to do something. And a lot of people didn't plan properly. Frankly, they're 65 years old right now and starting over or broke. And they need to do something as a career, but it needs to pay well, have dignity, and give them flexibility to still play with the children and grandchildren and not miss their lives. 61% of boomers are more afraid of outliving their money than dying. And there's a good reason to right now. After the market has dipped 20 to 30% in the last 2 weeks, a lot of people watched, if they had their money in the wrong spot, watched their entire retirement evaporate again because they didn't have it in the right place. Speaking of that, the reason people are fearful right now is the three-legged stool of retirement is broken. People used to retire on Social Security, a good company pension, and personal savings. Well, what's the problem with that? Right now, they're calling it social insecurity. Yeah, most people are promised that they're going to get something. We just don't know when it's going to start and how much. They keep moving the cheese. As soon as you start getting closer, it goes further out, and they keep reducing the actual amount that you're owed. Frankly, you've paid into this system for your life, and now it's time to get it back. Same thing with company pensions. Frankly, unless you work for the government, most pensions are gone. They're too expensive. Companies couldn't afford them, and they bankrupted out of their obligation. So now a lot of people have their own savings, their own 401k. And that's a defined contribution plan where it's based upon what you put in, and the company's not putting in their fair share. And then personal savings, just at an all-time low. What can we say? We're a consumer-based society. There's a lot of cool stuff out there, and people spend like crazy in America. And with that, people are ending up without the kind of savings they used to. People used to save 10 to 15% of their income, and they're just not anymore these days. What are some ideas that we think are important for people to know, concepts financially? Just simply the compound interest ratio. There's a financial division problem called the Rule of 72. If you divide 72 by the interest rate you get on your money, or any number, the answer is how long it takes that number to double. So if you're getting 1% on your money, 72 divided by 1 is 72. That means essentially it takes 72 years roughly for your money to double at 1%. So if you got your money sitting in a bank account earning 1%, well, take 72 years, add it to your age, and that's how long it's going to take to double there. If it's 0.1%, which is more likely, it takes 720 years for your money to double. Yikes. When is that ever going to happen? In this equation that you're looking at, a 29-year-old with 10 grand saved up would be 101 before it turned 20 to $20,000. At 4%, it doubles every 18 years. At 6%, it doubles every 12. At 10%, it doubles every 7.2. So look, 72 divided by 10 is 7.2 years. The same 10,000 turns to 640 at age 72. And roughly by age 80, it'll be over $1 million. So would you rather have $1 million or less than 20,000 at retirement? Well, then where's your money? And some of you might say, this is not the time, Jeff, to talk about this. Man, everybody's losing their money. The money, people, we're in terrible shape right now. And I'll just tell you this. This works against us too. You want to add insult to injury? Think about debt. What if you have $10,000 of debt at 18%? 72 divided by 18 is 4. That means your debt is doubling every 4 years. So that's at 18. We're not going to mention all the store cards, TJ Maxx, Home Depot, all these cards that are 24, 28, 30. We're talking about money doubling so fast. So if your debt is doubling like this and your savings is doubling very slowly, is there any wonder why people can't get out of the rat race and get ahead? As we get older, aren't we supposed to be getting better financially instead of worse? A lot of people are going in the opposite direction because they have their money in the wrong place, working in the wrong way. So what do we try to do here? At our firm, what we're trying to do is move people's money from lower interest rates, their savings, to higher interest rates, simply put. And then all of our high interest rate debt, we got to fight to get our debt to a lower interest rate. It's not something you do when it's convenient, and it's not something you should do because you're on the verge of bankruptcy. If you're on the verge of bankruptcy, it's too late. You should have been doing it all along. So we got to do this. A lot of people have not been taking the time to take care of this, and that's what we do here. How about investing? There's 3 ways, really, generally speaking, to invest your money: fixed, variable, and indexed. So a fixed rate of interest would be guaranteed usually. It's low. It isn't going to go up or down. You know what you're going to get. Unfortunately, the rates usually here are so low, 3% or less, that you can't even keep up with the cost of living or inflation. So automatically, it's a good slow way to lose your money if you're not even keeping up with inflation. Then there's variable. Well, you've gotten a good taste of it these last 2 weeks. The market swung down 30%, and then it went back up 20%, and then it headed back down on Friday. It's a roller coaster ride. You know, that's fine if you're young, and every time it's down, you're buying, and every time it's up, you're selling. Most people don't do that, frankly. They buy and they hold and they pray. And unfortunately, that's not a great strategy long-term for investing, especially if you're within the retirement red zone, which means you're at 55 or older, and you can see retirement off into the distance. That's where it's time to know roughly what you can expect and know what you have as a floor or a safety net on the bottom side of your investments so you don't lose what you spent a lifetime building. And then there's indexing. Indexing is a little bit of the best of both worlds. I'm not going to get into the way they do this, but they use options and things to guarantee and put a floor on your investments. So no matter what the market does on the downside, you don't lose money. Now, what do you give up? There's no such thing as something for nothing. What you give up is a little bit of the upside. So you don't get all the upside, but you get none of the downside. And if you look at the graph, the indexing is more like a staircase. Goes up and there's lock-ins of the gains. And then until it goes up again and surpasses that amount, then it doesn't go up, but it's flat, it doesn't go down. So every time you get a statement, and you're gonna all get your quarterly statements here next month and probably be pretty scared if you're in variable investments. Wouldn't it be nice to know that it's just always going upward in an upward direction? So we're trying to help people get their money in the right category, the right one of these three categories. And then there's simple taxation. Taxation is the biggest expense we're all gonna face in our life. There's income tax, which is gonna take a chunk. There's sales tax, there's property tax, tax. There's tax on everything. Well, everything legally we could do to reduce our taxes makes sense, doesn't it? One of those things is to just learn how to invest in a tax advantage way. One way people invest is fully taxable. CDs, bank accounts, savings accounts, things that every year they get a 1099 on any gain they have, and they have to pay taxes on it. Those taxes drag down the net return you get every single year, so it reduces the compounding and the interest rate that your money compounds at. Smarter investors use tax deferral. They use 401ks, they use IRAs, annuities, and they put money in either tax deductible or pre-tax, and then the money grows tax deferred, and it compounds faster, so your statements look better. Unfortunately, at the end, if you could see the blue there, when the harvest is big and the number's big at age 59 and a half or later, which you gotta wait, it's locked up, at age 59 and a half or later, when you start taking it, every dollar that comes out as ordinary income because no tax has been assessed to it yet. Every dollar gets pulled out at the highest tax bracket you'll probably ever face, which is your ordinary income tax. And a lot of people say, well, Jeff, my tax will be lower when I retire. That's an urban myth. Most people, it won't be. It's going to be the same as it was the last 5 years before they retired. People are not going to go to doing nothing and spending nothing and living off nothing during retirement. And if their spending habits require the same amount of income, they're going to have to pull that plus the taxes out right off the top, and it's going to get nailed with taxes. Mostly half of somebody's retirement is going to be given away to taxes. And then there's what I believe is some of the smartest investing strategies, which is paying the tax on the seed and getting the harvest without having to pay income tax on it. And you can use Roth IRAs or investment grade insurance on that. The wealthier people use investment grade insurance, and the people who need more flexibility of the dollars will use investment grade insurance. And the novices or beginners at this will use Roth IRAs, where they put the money in after tax, but never again have to pay tax on it. So we're trying to get people's money into better tax situations, the right type of investing, and better interest rates. And we're successful at it. So here's what we do, everybody. As people are struggling financially out there, our solution is something called a financial needs analysis. Looks a little like this if you can look into the camera, but on the screen here, it's a 6-step approach to planning out people's finances. Just ask yourself if you know anyone who needs help in these areas. Number one, increasing cash flow. We're looking to create a budget for somebody and consider other streams of income. Number two, an emergency fund. We're supposed to have 3 to 6 months of income, liquid, set aside in case an emergency comes up. Number three, debt management. Most people are struggling with debt. They didn't get into debt overnight and they won't get out overnight. But wouldn't it be great if there was a way to get out of debt in a third to half the time without paying any more per month? We've got programs like that, and we think people need to look into those. Number four, proper protection. That's your insurances. A lot of people have all kinds of insurance, but they have no proper training or education on it. Car insurance, home insurance, life insurance, disability, long-term care insurance. I mean, we have all these insurances, but where was the training and education on it? Most people have to go to the school of hard knocks to get education on this. So I'm just telling you, it's a challenge, everybody, and it's something we got to look at. And people need help reducing and shopping for their insurance. They need to look around for insurance at a lower cost, and they need to understand it and try to get better returns. It's not all priced equally. You could be paying double what you should for the same insurance somewhere else. And so we try to help people by shopping for them in that category. Number five, the nest egg. How many of you would like to retire someday? Well, how do you retire? The way to retire is to have a nest egg large enough that you can live off the interest it kicks off the rest of your life, no matter how long you live. Well, there's a couple questions that rise up. Number one, how big does your nest egg need to be? Wouldn't it be great if there was a computer program where you put in your age, how much you need in today's dollars, and how big it would have to be to last if you live to your 90s? Well, we got that software. And then would it be nice also to realize that, look, with whatever money you have saved, that you put a floor on it, that you don't risk losing what you spent a lifetime building, but you still get professional money management and you still get the majority of the upside of the market and tax advantages. So that's what we do in step number 5. And then step number 6 is preserving your wealth. If you've done well and you're wealthy, how about keeping what you spent a lifetime building? You know, that you need wills, living wills, trusts. Who are going to make your decisions if you're financially incapable of doing so? And are you sure your money isn't going to get caught up in probate if something happens? And do you have proper asset protection? Well, we utilize attorneys for that, and we make sure that we preserve what you spent a lifetime building. How much do we charge for this service? We made it affordable for everybody. Listen, it's free. For $0, we'll go help individuals, families, and companies with these 6 steps for a couple hours, consult with them, and give them the answers at no cost. There's a lot of companies that'll charge anywhere from $1,000 to $5,000 to give this advice, and it's worth it. But most people aren't going to pay it. They're going to continue to make mistakes and bad money decisions the whole rest of their life because they don't want to pay for the advice. We realize that. So that's our loss leader. That's why we brought it down, and we give it away gratis to everybody and give them an opportunity to at least learn. If we can't build rapport and trust in 2 hours for somebody to do business with us, we don't deserve their business. So how do we get paid then? You know, this is a business presentation. You're probably wondering, well, how do you get paid? Well, I'm going to show you how you get paid here in a minute, but I want to let you know we take our advice, if someone lets us, and we place it with hundreds of companies that are household names. We have hundreds of mutual funds and ETFs and active money management. We represent over 100 of the top insurance companies out there, and we go shopping for our clients. We help do the planning, we help do the strategizing, and we try to get people's money in the right place. These companies pay us for placing business with them. It's called outsourcing. It's been done for years in this industry, and they pay us well. And a lot of you might be asking, well, why don't I just call Prudential myself? Or why don't I call Fidelity myself and have them, will I save some money by cutting out the middleman? No, they're going to transfer you to their sales desk, and somebody inside is going to get paid. So you might as well go through us, because if we don't like Prudential, we'll switch to Nationwide or somebody else. And it doesn't cost us. We represent you to the industry instead of one big company to the client. It just makes sense, doesn't it, these days? And then they pay us for that. How much do they pay us? We're not going to hide this. We think it's important to understand the financial industry is still one of the highest paying industries in the entire world. It always has been, and it looks like it will be for the foreseeable future for a few reasons. The upfront money is terrific, but there's also residual income that only comes, in my mind, from a couple things: insurance and financial services. Insurance has renewal. Every time you pay for your car insurance, your health insurance, your homeowner's insurance, you know the agent gets paid again. That's why they keep in touch with you and send you little goodies right around renewal time, because if you renew, they get paid again. Some people pay their health insurance premiums every month. You know that renews every month. The agent gets paid again every month. That's why, even though it's not a sexy industry, a lot of people want to be in it, because if you do it for a few years, you could possibly build a residual income that takes care of you the rest of your life. On the back end of this is trail commissions on investments. People put money into mutual funds, 401ks, ETFs. There's a fraction of a percent as a management fee built into all these products, no matter which company they're with. You could be in a no-load mutual fund, and there's still built-in management fees, and the person that sets it up gets a fraction of a percent on whatever's in there. So as that pile of money grows and does well, the agent who initially sets it up does well too. And they get a little percentage of an ever-increasing amount of money. And so those are the residuals that are only in the financial industry. Folks, if you're not in this industry, you're probably still trading your time for money. No matter how big your salary is, you're probably not getting paid what you're worth, because when you stop, so does your paycheck. So We have one little example here. If you don't have financial services experience, that's fine. We have a training program, a digital one. We have offices, 2,500 offices around the country. And we have on-the-job training, which I'll talk about at a later time. But take a look at this. If you are at a beginning position with our firm at the lowest contract level called associate, and you helped out one client a week. Now, every type of product is different. Every type of product pays differently. But I'm sure you would agree if there's a 40-year-old man saving for retirement and trying to protect their family, $50 a week or $200 a month isn't out of the range of a reasonable amount of money for an average person. I'm not using wealthy people for this example. If you happen to know more affluent people, these numbers get blown way out of proportion. In this example, we're going to use a 40-year-old male saving $200 a month into a product that protects their family, grows in a tax advantage way. There's a savings element and an insurance element. It's called an IUL. I'm just going to use it for an example. It's not for everybody. For most people, it should be in their portfolio somewhere. If you're at our lowest paying position and you help one client a week do the paperwork for this, which takes about an hour. It takes an hour to present the idea, gather a financial needs analysis, present the idea, and write it up. It takes about an hour, maybe an hour and a half, 90 minutes. You'll make an extra $4,300 a month doing that at our lowest paying position, an extra 50 grand a year. Why do I say extra? Because if you have a salaried position somewhere, number one, it's at risk right now if you don't know. But number two, you could do this evenings and weekends. You could do this from home. We've got a platform. We're one of the only financial companies of our caliber that would let someone do this part-time. Why? Because it's supervised by full-time brokers and people that do this for a living. Therefore, it's hard for you to mess up a client. If you're referring them in, maybe a professional takes care of it, and we do a split arrangement, 50-50 on it, where the client gets professional care, you found it, and everyone wins from the situation. So in this case, you make $51,000 a year. After 25 to 30 clients, if you express and show some management capability and leadership ability, you get promotions and higher contracts. Permanently, if you're a senior marketing director, which you could do in somewhere between 3 to 6 months, the same one client a week pays more like $92,000 a year, considerably better. And then there's management. Look, everybody, if you're helping, if you're managing a small team and you're not even doing it anymore, you're literally sitting there showing people how to produce, and you're more of a manager type and a leader type. You got that leadership ability. And you lead a small little office or a small group of 5 agents that are all helping one client a week. You make $200,000 a year doing that. If you want to still go ahead and help your one client a week, you could add your $92,000 to it. And you're making about 300 grand a year. If you got a small office, you got to pay for that. This is an independent contractor situation, and you might have to pay 2-3 grand a month to lease a little office space, and unless you're doing it from Zoom and things like this, which is the new era. But you'd still net out over 200,000 a year running a small office, and you're not limited to everyone doing 1 sale a week. What if everyone did 2? You double it. What if everyone did 4? You quadruple it. What if you have 10 representatives instead of 5? We're not talking about some MLM 100,000 people thing to make real money here. We're talking about you personally helping families, or you build a small sales team that helps families, and it makes such a huge difference, everybody. It's uncanny how much money can be made in the financial industry. And then there's recognition. You know, most people either get paid well or treated well at a job. They rarely get both. This is one of those places where we get paid like I show you, this is just one way we get paid. There's expansion income and all kinds of other things. This doesn't reflect residual I talked about earlier. I just want you to know that this is just a glimpse into the financial industry and why you should be doing this instead of whatever you're doing right now. Recognition, you know, they say babies cry for it and grown men will die for it. I've never been recognized more in my life. The last 25 years, the parent company I work with, they give us Super Bowl rings. They give you gold Rolexes. I wasn't never a big jewelry guy or into that, but I'll tell you what, the more they give you for free, Hey, the more I become a big jewelry guy, I don't mind it at all. What's the most important is I know what I need to do for a promotion. Every one of our associates knows what they need to do to get promoted, and it doesn't discriminate. You know upfront, in full, if you do this, you get this, and you get promoted. Someone showed that to me in 1995. I said, I'm gonna work as hard. I was a hard, blue collar, hard working kid. I said, I'm gonna give it a push. Are you sure I could go really to the top of this company in a short period of time? And they said, try us. And I did. 8 months later, I held the top field position in the entire firm. And so I just like the fact that I know what I need to do to get promoted. It's not a mystery to me, and it is to so many in many jobs. So let me wrap up with this, everybody. We got 3 options here for you. Option number 1 is become a client. If you saw anything that intrigued you and you think, man, I need to check up on my finances. I need somebody to show me how to put a floor on my investments. I need to figure out what to do with this market. I need to make sure my family's protected. I need to worry about my parents and their long-term care needs. Whatever that happens to look like for you, get back with whoever sent this link to you and get a free financial needs analysis and see if it would work. That's where I started. I attended a seminar like this 25 years ago, and the guy offered a free financial needs analysis, and I jumped on it. I was young, I was single, I was broke. I was 24 years old, single and broke, living in an apartment. I was a little embarrassed, frankly, to have anybody come out and do a financial plan for me. They didn't have technology like this where we could do it online. So I cleaned up my little place. This guy, Greg, came over, and he took a look at my finances and immediately said, you're pretty broke. I said, I could have saved you a trip. He said, but look here, why are you paying these minimums on all these credit cards that are at 26 and 28 and 29%? I said, well, it's easy. That's all they're asking for. And he said, if you keep doing that, you're going to be out of debt. And he had a calculator, a special calculator. He said, you're going to be out of debt in 22 years. But if you do this, this, and this, you'll be out of debt in 6. I said, sign me up. I was so ready to go after that. I said, can you help my parents? And can you help my brother? They fought about money and worried about money. They're in bad financial situation right now. I said, sure. Would you like to get paid for those referrals? And I said, well, it's my family. I actually, more than that, I just want to see them helped out. I'm going to switch off this to this view, if you don't mind. So I said, look, I just want to see them helped out. It's my family. And they said, well, if you help out your family and you refer people in and we're able to help them out and they become clients, you can get paid somewhere around $1,000 to $2,500 per referral. And I said, are you kidding? Can you talk to all my aunts, uncles, and everyone I know? I just had the service. I just had somebody literally do it for me, and it worked, and I liked it. And I said, well, what's the catch? It sounds too good to be true. And he said, well, the catch is you got to get licensed. It's the financial field. The good news is it's easier than a real estate license. It costs a couple $100, and you can study from home over 1 weekend and be licensed in a week. And then you can start getting paid on your referrals. It's not a referral fee. It's a 50-50 split of everything you send in, and everyone needs it. I said, well, do I have to quit my job to try this? And he said, no, you don't. We're the only financial company of our caliber that lets people keep their career and their job if they don't want to risk it, and learn about money, get licensed, refer some people, and see if it works on the side. I said, fine. Why not give it a shot? So I did. I started referring people. I kept my job because I was paycheck to paycheck. I was 24, single, and had a net worth of minus 30 grand. I couldn't miss a rent payment or a car payment. So I did this. I started referring people in, and here's what happened. Everybody I referred in called me back and said, Jeff, thank you for the referral. They were nice. They were not pushy. They did a great job. I moved this. I was paying too much for that. I had my investments in the wrong place. I said, great. That's really what I was concerned about, was that they didn't embarrass me on my referrals. But then I got a call from the branch office, and they said, hey, you just made $1,100 on that. And I said, I did? And they said, yeah. And their sister's coming in next week to do roughly the same thing. You should make another $1,100 to $1,300 next week on that. I said, wait a minute, I'm going to get paid if my referrals referring people too? This is going to be good. So I kept referring in. 8 months later, I was making more money here part-time than my full-time career. And that year, which was 1995, I made about an extra 40 grand. At the end of that year, I quit my job and came full-time. And then I was on the inside receiving referrals from other outside part-time referral people. Folks say, well, where do you get your clients? Do you have to cold call? No, you don't. We have a system for that. Thousands and thousands of part-time referral people referring things in, professionals on the inside handling it, and there's plenty of money to go around. And so anyone can transition and learn from being a part-time referral person to coming in. So option 2 is a twin career. You keep doing what you're doing, but do this on the side. By the way, after I came full-time, my business exploded. I started receiving referrals. I opened up a little office, me and 5 of my friends back in Oak Brook, Illinois. And they said, all my friends and family told me, don't do it. It isn't going to work. Don't risk it. The reason they said that is because they were risk adverse. I come from an opportunity generation. They came from a risk adverse generation. So I think they had my best interest in mind, but they were scared. I went and did it anyway. That next year, I made $146,000 income in 1996, when that was a lot of money at the age of 25. Then the next year, I made $262. The year after that, $405. The year after that, I broke $600. And the year after that, I made over 7 figures before I turned 30 years old in this business. The most exciting part of that was if I stopped immediately right there, that residual underlying part I was talking about was about $50,000 a month, which was in place for the rest of my life after 5 years of hard work. A good 3 to 5 years in the financial industry, you might be done. For some people, if you're watching this and you're over 50, this might be your last chance. This might be the last chance to make up for a lifetime of mistakes financially, or a lack of the ability to save financially. Easily, I believe in the next 3 to 5 years, you could build an extra 5,000 to 10,000 income residual that'll take you through retirement and make up for not building a big nest egg or saving your whole life if you couldn't do it in the first place. So option 1 is to become a client. Option 2, part-time referral associate. Option 3, full-time broker, entrepreneur, where you open up your own office or offices. We've got, the last I could tell, we've got a need right now for another couple thousand offices around these United States and Canada. We're operating in all of North America right now, and we need that in the next 5 years. So I don't know where you fit into the equation, and I don't know if you fit into this equation. I want to let you know right now before we hang up that there's an interview process, there's a background check. There's a legitimate full background check. We don't want everybody. We're growing fast. We've had no layoffs. We've had no business interruption. Our payroll is twice per week, not twice a month. We get paid every Tuesday, every Friday. Our back office cuts tens of thousands of checks, and they cut them like clockwork this week, the week before, and next week. There's been no interruption in our business, everybody. This is the business for the next 5-10 years. If you want, it's been for me for 25 years. I've never been more excited than I am about the next 5 or 10 years, just because the need has never been greater. The opportunity has never been better. The speed of meeting with somebody on platforms like this has never been more simple. And I think we're going to grow at a much faster pace than ever. So get back with who invited you to this immediately. Call them, text them, email them, and let them know that you want to take a look. You want the background check done. You want to see what it's going to take to start referring people and pick up a license. Check us out. If you want to trust the system, do a financial needs analysis and see if we can't help you. And if we can, and it's good enough for you, it'll be good enough for everybody. Thanks for being on. Be safe, everybody. And let's go out there and keep growing and expanding.